Hello freedom traders, this is your boy Collins FT. So today once more again we're gonna do as usual. We plunge straight into the video, and guys, as I say all the time, practice practice practice. So this time around we're not gonna do the usual analyzing and giving out signals. um, this is just an example. This is one signal I gave last time, but this time around we're gonna do backtesting, because backtesting, as I say, it's the most important part of technical analysis in trading, whether it's forex, whether it's crypto, whatever it is. Backtesting, even stocks, you have to do your backtesting. You test your strategies, you make sure you perfect them, then before you take any financial decision, which is the most decision in everyone's life, the most important decisions in everyone's life. And we are actually literally taking financial decisions anytime. So before you take them, you have to be very sure and you have to be knowledgeable about whatever you are doing. So the most important thing is, now we're just gonna pick a random pair as usual, and then we backtest. Let's go with GBP. Yeah, GBP CHF. So we can go back to say 2015 or beyond. Okay guys, let's look for an area that is chubby, that has movement. Yeah, like this area. But I don't want us to have like an impression like, okay, we know how the market went, so we're just gonna, as you can see what I'm doing. Okay, so now I know it's actually not gonna cut, but let's see. Yeah, oh, it actually did cut. So now we didn't see whatever the market was going here. We don't know if the market was down or up. So first thing, we look at the structure, whatever the market is doing. I think let's go to the daily to do our back testing there. Yeah, so right now we look, first thing we look at the structure. We put our guidelines as usual, guys. You call it trend lines, me I call them guidelines, because they guide me on my trading decisions. They are very important. So this is it, guys. When you make, at least we know what's gonna happen if the market breaks here or breaks here. So then we go for the key levels. This is one key level here. This is another one here. So bringing it right down, this is the first key level. So these key levels, they help us to enter and get out. So they determine whether we have to buy or sell. Those key levels, because you don't just buy anyhow, you have to understand demand and supply, and then before you'll be able to make a decision whether to buy or to sell. So right now the price must reach these levels before we can make any decision. So to make it more nearer, so that we don't have to wait for a very long time before we see action, we can bring our key levels closer. So right now we're gonna observe where the market is going first. Okay, so it came down. So if it breaks this level, gives us a signal and a confirmation, then we sell and we take profit here. So that is how it is. So the technique now is knowing if actually it did break this level in such a way that it's going to come down right down at this support here. So first, as I said, it breaks with a bullish or a bearish momentum. That is a signal that the market is going to that direction. After that, you don't just buy after the bullish or bearish momentum candle. You have to wait for the market to come back and retest. When it retests, it's going to give you another signal. Then after that signal, a confirmation. So right now it did break, but without a bearish. This is not actually a bearish momentum candle. So we wait, you see. So it went back, you see. So things like this, they do happen. This is a whipsaw, probably an event that happened on this day, Monday 10 May 1993. It was surely a crazy one. This is GBP CHF. Just for fun, we can just search Monday 10 1993 economic calendar. Economic so fundamentals, guys. So this also, it goes with fundamentals. And so 25 Monday 10, that was Monday 10. Okay, actually it's gonna take some time. Let's see. Okay, guys, uh, this happened, and by the way, if you're following my strategy, you wouldn't have even entered a trade. Like, there was nothing here to trade. So with such a crazy out like such a crazy candle, you just chill, and you know that after that the market is still gonna go on. So right now we're having a bunch of whipsaws. We don't trade, we don't do anything, we just chill. So okay, now it's giving us signs and indications of crossing up. So okay, this was just a week not to trade, not to even trade. You don't have to be around the market these days. Yeah, these days 1993, no one was supposed to be trading GBP CHF. I don't know if with other pairs how it was, but yeah, apparently, as I was trying to search on Google, normally I should have gone to the economic calendar, but this kind of looked as a news. This was news, and it was obviously a financial or something. It was a crisis. I think it might be when it might concern China or something. I don't know. Or it's when George Soros did shot uh, the British pound. So it was within that period. I think it was in the 80s. So, but there was some crisis. There was some big news these days that you see the market behaving like this. So, but you see, this is another one. This like this, you don't trade at all. It doesn't respect a setup, and the market has no specific direction. So until it cools down before we take any decision if we're going to trade or not. So it actually gave us a signal here. So this was a sell signal, guys. This was a sell signal But if I'm selling here, I'm not going further. I can only go down at this level here and not further. So after all the drama, the market gave us a signal, but it's a very bad one because, as you can see, risk reward is 0.93, so there is more risk than profit. So it's something we don't even want to trade. Yeah, you don't even want to try this one. This also was another signal, but it was so crazy. So we continue to see whatever the market is doing. You see, so right now you cannot tell if it did hit your stop loss before hitting your TP, or it actually just when hit your TP before hitting your stop loss. So I wouldn't advise anyone to trade in such a market condition at all. So that is why you do backtesting, because you then see these things and you know they happened before, they will still happen again. Never seen candles like this. Seriously, never seen candles like this. And they kind of continued for some time. Okay, so they ended here. I don't know whatever was going on within this period, starting from Monday 10th May 1993 to Tuesday 3rd August 1993. Something was going on that was crazy. We can search that later, but it's important for us to know what happened, because we already see how it affected the market here. So that is purely fundamentals. So we have to search that so that we know that if such an event is coming up, we just better stay away from the market. Yeah. So it started to become normal here, and right at this point we're still skeptical. Yeah, we're still skeptical if we can consider this a level. Yeah, we can still consider that a level, and we see if the price is gonna reach here. Yeah, okay, so price actually reached. So now it's being normal. Yeah, now price is acting normal. So we have to check if it's gonna continue to break down, or it will go back. And if it's breaking down, as I said, guys, first you look at where you're gonna take your profit. Yeah, before you enter, look at where you're gonna get out. Yeah, so we are having a good uh, this is a lot of pips here. This way like 800 pips. So we go for it. So we observe, we see however the market is going to behave here before we take that decision. Okay, so this was a signal. This here was a signal. This is a confirmation. Always buy here, guys. When you buy here, whatever happened, it's not your fault. You followed your setup and it didn't work out well. That's simple. You don't regret at all. And this is where we are taking our profit. So it's very simple, guys. It's very simple. You don't have to stress the market. You don't have to stress yourself with the market. So this is a very good risk reward ratio of 4.66. Yeah, so this is a very good one. So let's see how this one worked out, and let's go. Okay, first of all, we got kicked out just right immediately. But why I say we got kicked out, that is for those who entered before the market, those who entered with execution, because this is buy stop. That's why you see my level. My level is here. Yeah, my level is here. My buy stop is here. So it didn't trigger. But for those who did market execution, did got a stop out. So when you see a candle like this, when you see a confirmation, yeah, there are other aspects. It doesn't mean that, hey, just start buying. No, there is, if price breaks this level, that indicates that, okay, the market is going to go that way. But it didn't break that level at all. So you put your buy stop, it's still there. Whatever the market is doing inside this red zone, you don't care. It's still there. You know that whenever the market is going to break this level up, then your trade is going to be effective. So now it triggered. This is where it triggered, guys. So after you put your buy stop here, you were patient for 1 2 3 4 5 6 7 8 9 10 days. You were patient, then on the 12th day it triggered. So let's see if it's gonna respect our setup. So it triggered and we got the stop out. So when you get stopped out, you just have to re-observe the market and re-enter. That's why your stop loss got to be very small. You don't have to make bigger stop loss. It should be small so that when the first time it doesn't work out, you look for another entry, then you enter. But this was confirmation here. This was another confirmation here. Before, I didn't even see this one before it got triggered up here. So somehow the price came back. We're still gonna re-enter. We can still re-enter here if it doesn't break this level down here. Okay, so far it hasn't broken this level. It actually hit that level but not broken. We're gonna look for a different. Okay, so that is it, guys. You re-enter. Then we go. So with inexperienced traders, what happened here when we got kicked out here, you start crying, you start shouting, be like, oh, the market did what, the market hit me out, then started going towards my direction. Yeah, this happens when because the banks, they know you are not the only one that can be your stop loss here, because the banks are trading against us. Your market maker broker is trading against you. So this is the perfect thing they do. So whenever they come, they clear all your stop loss. That is when they go towards your direction. So to trade like them, you know already what's gonna happen. So for me, I have up to 3 trials. When I try the second time, I still get kicked out. I try the third time, which is the last time. If I get kicked out again, that's it. So uh, second time, you will see that you will recover your the money you lost on your first entry, then times 2, because it was a 4.6 ratio. So now you lost 1 ratio, you are left with 3, which is still good. So you see, guys, so there are 2 possibilities. Either you, yeah, so this level or this level. First take profit, then second one. So that was me just being greedy over here. I didn't check this level down here because there are always two levels. Yeah, there are always two levels, like same here. So but there are those who still hold, there are people that will still hold. For me, whenever the market gets this candle, this bearish engulfing, what I will do is usually I will get out, because I know when the market breaks like that, it will reach here, it will reach at this level. Still, you are still in profit, not even you are still here in profit. But it will be better when you see a reversal signal like this one. You can get out and then wait for the market to come reach here, give you another signal before you buy again. So that is a trade management, so that you get you maximize. So this is another signal, guys. This is the second one. So here you didn't enter because you didn't find a signal, but you are still in profit for those who did hold. But if you didn't hold, you got out here like me. That's what I would do too, and then I'll wait for another signal, as I said. So here it didn't give me a signal. I was cool. So it came here, then gave me this signal, this confirmation to buy again. So here I will re-enter, then I get out here again, then I look for another possibilities if price is gonna continue to break this level, because now the next level we have here, that is the next level we have. So I got out here, I'll re-enter here, but for those who held, you are still in profit. So the re-entering, then got kicked out here, then this is another one. That's why it's always advisable, guys, to take whatever the market gives you, and then you chill. Yeah, you take whatever the market gives you, then you chill. So if I got here, then I chill, I would have been like in profits. I would have been in profit of maybe say 200 or 100 pips, but I still got in here again because I saw another entry, then I got kicked out. So I'm having a drawdown, not actually a drawdown, I'm still in profit, but maybe very less. Instead of 200 pips, I'll be like maybe 100 pips right now. And this is another signal again. For this one, what I will usually do is I'll have to wait for price so that I get the most little stop loss, like the smallest stop loss possible. Then I re-enter again, because this again is another buy signal. Yeah, this is another buy signal. So here I will just enter with a small lot, and this now will either completely take whatever I make from here, or it will give me back whatever I lost from here. So it's okay. So that's the thing. The lesson here, guys, is whatever the market gives you, you take it, you chill. Yeah, you take it, you chill. So we could have taken it here. We consider this to be the level. Then we go back, we do more analysis, and but let's see, guys. Yeah, so with a pair that has been behaving in such a way just recently. It's kind of not really a good pair to trust, because these were kind of really good entries here, but it didn't work out that way. So it gave another entry, but this time around, this is if you are only a GBP CHF trader. But if you have other pairs, it will not be any good to do it. But the reason why I will want to re-enter here is because of this double bottom that has been formed already, as you can see. This is a double bottom that has been formed. Then I got another entry signal. So remember guys, I'm either at a break even on this trade, or I'm at a loss, but very less loss. So right now what I will do is I will try to, because whatever the market does guys, it will hit this area, whatever it's going on. Since it did break here, though it will break sometimes, and though the breakage was not actually, there was no bullish momentum, that is what I failed to see here. Like this is the first break, zero bullish momentum, so I couldn't consider this as a break. Yeah, I shouldn't have considered this as a break, though I did well to get out here, but I shouldn't have re-entered here, because this also, no, I actually entered because it's not only a bullish momentum, but it's an engulfing bullish candle. So that's why I re-entered. But somehow something happened. Maybe the market had to do so, so as to form to form a structure, and which is actually the structure that I'm seeing right now, and it's the reason why I will enter again. I would re-enter again here to take TP normally here, or we can take like right up here. So guys, let's go. This is why I say backtesting is really great, because if it was analysis, I would be giving you what I think about the market. Yeah, I will actually be telling you, okay, when you reach here you sell, when you give this signal you sell. No, it doesn't actually work like that in reality. We all know that it doesn't work like that. So with this backtesting, it gives us all every reality that we do face in our day-to-day trading. So this is actually another example. So right now I will be entering here, as I already put, because I saw the structure, and I believe the market is gonna go up, break this level, and reach right up here. So let's go guys. Okay, we are in profit straight away. Okay, the market is finding hard times actually, so it didn't respect structure. He actually got like first TP, because this we could still consider this as first TP, and didn't break. So this is what I will say guys, the reason why we're keeping levels is for us to get out and get in. We are keeping levels to get out and get in. Okay, so if this one was it, then it will be here. Yeah, so you are buying here. The first thing is you get out at the first level, then you observe if the market did break this level with a bullish momentum. That is when you then continue to either hold your trade or you bring up your stop loss to somewhere around here. But what happened is the market did reject this resistance here several times. So the moment it rejected this at the first time, you could have just get out. So then it did reject another a second time. That is so many rejections. That's how the market did come back. So in all and all, we actually it was actually a good trade. We just needed to get out at the right time instead of being greedy and thinking the market is going to come right up here. We had to, of course, the market is not just going to go straight there. So giving us this amount of pips, that was 2.1767 to 2.215. So 2.1752. That's almost 1,000 pips, guys. Yeah, that was a lot of pips that the market gave us already. So remember, that is so because I'm in the daily time frame. But same strategy applies at all time frames, even if it's the 15 minutes, 1 hour, or 4 hours. So when you enter, you get out at levels. You enter, you get out at levels. There is a way I'm putting my levels. Let me highlight them so you might see how I do put my levels. So you see, this is the highest point, or that is the highest point here. Then the head of the highest point is where I put my first level. Always should be like that. Then in between here, you don't trade. In between, whatever happens inside here, you don't do anything. So you take your profit here, then you continue to buy here. You hold here only if this area got broken by a bullish momentum candle. That is when you could hold. So entering this trade, first TP was supposed to be here. Then if it did break here, we'll hold. Then second TP here, that is if it didn't break, it rejected. Then we'll be considering this other one. So it's step by step, layer by layer. So right here, I don't see any reason why I have to enter except for this one. So that was just a signal, so we cannot do anything about that one. So the market hitting us out and destroying completely the structure that we had in mind, we have to quit at that time. Yeah, we have to quit at that time. So this was actually trade management, guys. Say this was a 15 minutes candle, like all of this would have possibly happened within 2 or 3 days. Or this was maybe a 5 minutes candle, this would have happened maybe in 1 day or 2 days. So the entry were all sniper entries. We entered here, the market entered and here and went straight. The profit, we're supposed to get out somewhere around here. Yeah, at least with this one, the level was, yeah, first level was here. This was the first level to get out. So market came back we re-entered here, and then it gave us it was in profit. So that's it, guys. That's it. You don't have to push things. You don't have to be greedy. So this is what greediness taught me here, because since I believe that the market was going to reach this level, I didn't look at this other level here. So I didn't look at the first level here. So the market actually reached at that level, came back, but I got out because I saw this signal, as I told you guys. So if I could get out here and know that, okay, when the market comes back, it has to reach here before we look for a buy again. So I would have just waited. The market comes here, does whatever it's doing here. I re-enter for the second time. It hits this level and rejects. Then we allow the market to do whatever it's doing. So that is it, guys. Sorry, it's a very long one today, and it's because there was a lot of lessons to learn today from this video, and I hope you guys kept it till the end of the video. So thank you.